Welcome to FX Cast. This is our FX Cast market analysis for Thursday, May 5th, 2011. In our videos, we identify high probability trading setups, we evaluate the Go chart, come with a low volatility watch list and inside bar watch list. We'll review the economic calendar to see how it affects our open trades, and we have an education spotlight at the end. Our first trade is the Euro Yen, and we've been talking about this all week, and it looks like it's finally going to happen. Now, we're looking at the daily chart, and our trend is sideways up, so we do have an ascending wedge. However, right now, we look like we're going to trade to break below 119 with a target of 118.50, the second target of 118.20, might go a little bit further, and a stop loss of about 119.95. Let's pull up the charts and take a look. So as we look at this on the daily and the hourly chart, we can see the uptrend that we've been talking about, matching up the wicks here, and the downtrend we've been talking about. And we said this had to resolve one way or the other. And you can see that it is starting to resolve itself outside of our little wedge here. And so we're going to look at 119 here as our trigger to go long, because when we come over here to the hourly, what we want to do is take the wick, the low of yesterday, which is about 119.11, and you can see we violated that, and then we came back up, and this is 119.4. So 119 on the dot is going to be our trigger to go short the Euro Yen. I want to go over to the gold chart and show you, obviously we finally got our first real pullback. Now the question is, will the 20 moving average hold up as support? Or over here you can see the 50 moving average. It came all the way down to the 50, then it came down to the 20. So what's going to happen here? Will the 20 hold up as support? Right now it looks like it will. But what's interesting about this is if I pull up a couple charts to match with it, the Aussie dollar, what do we see? Very similar charts, right? What about the pound dollar? Pound dollar, very similar charts, bouncing at support. And so we can see, you know, obviously the dollar is weak and the gold is taking a run. People are finding safety in gold. But the one that's interesting is the euro dollar, and we can see that the euro dollar never really pulled back like the rest of them. So it's going to be real interesting. And you guys know that we've been talking about bracketing this, and then we had that high volatility of today's trading section that took us up, and then what did it do? It brought us right back into here. So we want to wait for a close above this area, but most importantly, I mean, again, we want to see what's going to happen with all of these currency pairs as they come into support and match what gold is doing. At the time of taping, we don't have any currency pairs that qualify for our low volatility watch list. As we've been saying, as we move forward, we're going to get a Twitter account up, possibly even through the terminal in FXCast Pro. We're going to update you every hour on what that low volatility watch list is. Inside bar, we have three: the Euro Canadian, the Pound Canadian, and the New Zealand Yen. With regards to our releases tomorrow, we've got the services PMI. Here, this is where Business Manager gives us their insight on the economy and whether or not they're going to be purchasing more. That's for the pound. The assets purchase facility, also for the pound. MPC members vote on how much money they're going to create for the program. The official bank rate and their statement, again, what is going to be the interest rate and what are they going to say about the economy for the pound. The minimum bid rate for the euro. Building permits in the Canadian, again, how much statements about the economy, how much new permits, how much new housing is being made. The ECB press conference is another way, sort of, where the euro, and they're going to talk about their monetary policy. Again, what traders are looking for are keywords to see healthy economic climate, slowing, those type of words. Unemployment claims, that's more of a lagging indicator, but it's showing us whether or not more people are filing, more people are out of work. Bernanke speaking for the dollar, he rarely gives us anything, but again, we're looking at the words. If he changes a word about the economy, that can affect the dollar. The IVPMI is yet another business managers for the Canadians, giving us their insight and views about whether they're going to be purchasing more. And finally, the RBA monetary policy for the Aussie is yet the banks given their statement about the economy, and again, it's a play on words. In our education spotlight, we asked the question, what do bad traders do that good traders avoid? What do winning traders do that is different? And primarily, it's about focusing on high probability trades and avoiding the common pitfalls. You don't trade the trade, you trade because there is a criteria that has been met and you're ready to enact that trade. You're not over leveraging yourself. You're not over trading. You're not trading out of fear. You're not trading out of missing out. You're trading because you have set up a system. You have set a criteria, and that criteria has met. You're not trading the trade. That's what losing traders do. High probability traders come up with that system, and they follow it to a T. Thanks, guys, and I'll see you next time.